do business. Now, where are we going to go to? Well, if that's the over round right there, then fair value is this price. So we're expecting it to go to $22. Well, this is what happened to that stock, of course. We saw that acceleration through the fair value price of 22. And since then, of course, we've seen it going up. It stayed bullish even above $24. It stayed bullish above $24 the other day and came back down a little bit, stayed above fair value. Remember, fair value is $21.90, $22 fair value. And obviously what's happened since then, of course, is that we've had an open up a little bit today, and then we rallied up to $27 from $20.50. Pretty good trade, relatively pleasant, a reasonable outcome. So if anybody was a buy and hold on Very yesterday, you've, well, $7, $6, $7 nearly on a $20 stock is not a bad return. Not a bad return at all, guys. If we look at some of the other stocks we've had on discounts today, on Discount Watch we had ticker symbol CEMI, which is this little fella here. There's the discount just there. Obviously you can see we've never ever got the discount price. We never got anywhere near it. There's the closing price, there's the opening price. We want to add 25% to that. You can see we never got anywhere near that 25%. And it's obviously not done very much anyway, so it wouldn't have made much of a difference. But you can see we never got anywhere near the 25%, so we don't even consider that stock as any use to us. We've obviously got this bad boy here, ticker symbol OLI. You can see also we didn't get the 25% discount. It has rallied from $78 to $82 for a $3 profit, but nonetheless, still not a trade for me. Still not a trade. CMBM. This is our number 3 position. Now, this got close to a good enough discount price. Not at the start. You can see that on this discount here, you can see that it didn't go anywhere except for up at the start, but it nearly trades to a discount. Nearly trades to a discount. You can see it stopped at fair value just there, and it trades down. Now, it doesn't, as I said, quite get to the discount. The nearest wholesale price is $26. So obviously you're going to start working bids against that $26, and there's the trade right there, right on 26 bucks. There it is. Can't hide it, guys. There's a trade at $26 right there. What happens next is we go from $26 to $27, and you make $1 profit on a $26 stock. It's nearly 4%. It's not a bad trade. It's not a bad outcome, is it? It's not exactly earth-shatteringly good, but for an outright stock position, no leverage, no options, making a few percentage points is pretty pleasant. Let's take a look at some of the others. SNDL, ticker symbol SNDL. And you can see that this one, it spikes. So if I take that about a little bit, you'll see that there's actually a very large spike on this. If I take it down an extra couple of time frames, you'll see the spike a little bit easier to spot here. It's on this cash open here. So when it cash open, you can obviously take a look at that and say, right, there's the open, there's the close, and there's the 25% discount right there. See it? So there's your buy trade right there. Now, this is not going to be something you're going to be able to look at and say, well, we get a wholesale price, because it's a penny stock, right? It's a penny stock. It's trading at cents, right? So you're obviously having to look at that and say, well, I've just got to step in. 67 cents. 67 cents. And obviously from that point onwards, you can see that you had a very good rally. You see it's came back a little bit since then. But you had a very good rally. But where did it go to, guys? Where did it go to? Well, it went through fair value, didn't it? You ended up at $74. So you made 6 cents on a 60 cent stock. It's nearly 10 percentage points. And that's all right. It's a pretty good gain on this one. Now, what about the premiums? HGSH, for example. What about these premium stocks? What do you do with those bad boys? Well, you try and find ones that have that instant buy appeal. So you're trying to find the momos. These are ones that you want to see moving straight north. This one moves straight north after 30 seconds. This one moves straight north after 30 seconds. It's our number 1 pick. So when it trades back down into this area, I'm very, very excited to buy into this one. HGSH. It's Chinese real estate company, surprisingly enough. Anyway, so there's your buying opportunities here. And then again here. $3.96, $4 wholesale price level. So this should have caught your attention right here. Should have caught your attention. So what happened to this $4 stock? That's what happened to that $4 stock, guys. Traded $1.40 higher on a $4 stock. Is that not a nice trade? What do you think? You don't need to look any further, do you? You don't need to go down the list. You've found your stock. You've found your trade. You've made $1.40 on a $4 stock, guys. $1.40 on a $4 stock. That'll do. It's our number one pick, guys. It's our number one pick. There it is there. HGSH, ticker symbol, right there. There it is. No surprise. No hindsight trading. Exactly as we discussed in the tin. Exactly the outcomes that we would hope to see. And a fantastic little trade. Absolutely fantastic. And a duration of approximately 40 minutes. And still in the trade. Still looking for higher prices. Still in the trade. Still hoping that we get an extra little bit of follow through. So that could be you for the day, of course. Could be. We have had other ones. We had the Pioneer Power, for example. That also went back above the open price. Didn't give you a pullback trade, but it was a buy trade at $5. That traded $6. So that's $1 on a $5 stock. That's pretty good, isn't it? $1 on a $5 stock. You'll take that one. And that gave you, as I said, $1 profit. 20 percentage points on Pioneer if you wanted to take them. 20%, guys, on Pioneer. The Sutro Biopharmaceuticals, that also went bullish eventually after the first pop. $23, eventually trading $25.50, so about 10% on the Sutro Biopharmaceuticals. So you could have made some nice money on that one as well. Now, the other one didn't go bullish. The other one actually pulled back. Number 4 gave you a full pullback trade. And that gave you an opportunity to buy that one at $12. $1.12, 12 cents. And it traded up to $1.35. So that was a 20-cent move on a $1.10 stock. So around about 15% return on your money on that very, very small trade. So pretty much huge profits on all of them. So it doesn't make much of a difference which one you ended up selecting. You could have made some money on all of them, which is quite nice. Equities, still making pops on the upside, guys. Still making pops on the upside. Questions about the Prem again this morning, so we just touch on that as well. We'll wait until we get into classroom proper, but what we were obviously touching on in the Prem was just to make sure that you were buying into buy programs and selling, preferably selling into sell programs. It makes a lot of sense to try desperately and stick to these ideas. And if you can stick to those ideas, then you're going to avoid an awful lot of heartache and problems buying into buy programs, selling into sell programs. However, it doesn't mean you can't try and fade some of these ideas as well, if that's what you believe is the right trade at the right price. We also talked about the banker's margin again, and always worth your while putting the banker's margin on the charts, because the banker's margin should lead the specialists. We talked about that this morning. Banker's margin should lead the specialists, and when the specialists and the bankers agree with each other, my goodness, it's time to make a quick shift somewhere else, guys, because that's going to cause a bit of a problem when the bankers and the specialists both agree. Then the top edge is probably finished, and it's time to get away from the trade.